recap. I will say that there is approximately 45 minutes left in today's session. So these final candlesticks that we are going to run over, they are not going to be completely accurate. However, really for most of the afternoon, the markets themselves, they have been more or less fluctuating sideways. We're seeing a little bit of a percentage differential up and down, but overall, really, relatively speaking, they are somewhat unchanged. What is more important, however, is the general structure to the current market sort of environment that we're looking at. This is a chart of the S&P 500. This is on a daily time frame as well. Now, the current price that I'm registering is 3,087 points. This is no doubt going to change. However, we can sort of deduce a little bit of sentiment understanding from some of the candlesticks that have been showing up not only today in today's candlestick, but also a little bit more frequently as this market is continuing to push up. What we want to make very clear in this video analysis right here is that the S&P 500 for the first time today actually broke above 3,100 points. It was, of course, intra-session. So far, we haven't been able to hold above this, right, resistance area. And the reason I call it a resistance area is because, to a lesser extent, it is a psychological round number. And as such, really at the moment, we're starting to set up, once again, another little bit of a pseudo spinning top slash that of a shooting star candlestick. Now, what we spoke about in great detail over the weekend was candlesticks, candlestick recognition, and of course, when does it matter? And the answer, in short, to that question is very much similar to real estate itself. It is location, location, location. So essentially, when you begin to see these candlesticks showing up at this location, right, what would traditionally be that of a turning point or potentially an early reversal warning signal, it begins to lose, right, the severity of its message itself. The reason for that is because essentially we're in no man's land at the moment, not only on the S&P, but also on the Dow and the NASDAQ. Let me just explain that we are pushing to fresh new all-time highs. These markets, pardon me, are very much trending. And really above all else right now, the psychology of active market participants has shifted. The market has shifted from that of a range-bound state, okay, below that of 3,000 points on the S&P 500, really for the majority of 2019 and also going back to 2018. Every time we have pushed up into this level, it has acted as a resistance point. In the meantime, however, of course, we are continuing to build a series of higher lows. So really towards the back end of October, just around this point, the sentiment itself, it began to shift. It began to shift from that of a range-bound sell at resistance, buy at support, into just an all-out, flat-out breakout pivot, whereby we're starting to see the public participation, right, of sort of sedentary market investors pushing this market up and above this resistance area, whereby we are moving into that of a trending market. Now, in trending markets, you're going to see a bunch of these candlesticks. It is very common, all right? So do not sort of be a little bit fearful or scared when you do see these, technically speaking, reversal candlesticks show up and around these areas. It is very common. What is most important are these exponential moving averages. This is indicating to us, or at least it's directing anyway, the markets in their current trend. And the trend itself is to the upside. So the golden rule is always, right, trade in the direction of the trend, right? Or otherwise said, the trend is your friend. So first of all, what you shouldn't be looking to do at this point is to be looking to actively short the markets or essentially trading against the trend. That is very dangerous because there is no warning signal that's going to be, or at least established at the moment, outside of the ADX getting a little bit elevated, that this market needs to actually correct. So having seen these candlesticks on the S&P 500, even taking into consideration today's candlestick, it isn't a message, so to speak, that we are looking at an immediate pullback. What we need to do, however, is work in conjunction with these rising exponential moving averages and understand the key dynamic of this type of breakout trend is that in the event that we do pull on back down, we have got a plethora of support undermining this market. Not only traditional support being that of the support and resistance and the rising exponential moving averages, but they are going to work as a confluence of support whereby we see multiple sort of traditional areas of support which overlap, which are going to act as a very strong trampoline to propel the markets back and up and take out what is now appearing to be a resistance area on the S&P around 3,100 points. This is essentially the worst case scenario whereby we actually see a reversal. I really wouldn't bank on it at this particular point, although I wouldn't be surprised if it does play out. What you need to feel comfortable with, however, is that these markets are not pricing in a market top at the moment. And if you do see the pullback, it is going to be another buy the dip opportunity. Let me just refresh you when it comes to the year 2019. Each and every one of these triggers has been a bullish buy the dip opportunity, whereby, again, for those people who've been listening to this, they've been accumulating positions not only, or at least not expiring in 2019. Okay, I'll just put 2019 on my screen, but pushing that expiration out into 2020. And as such, it makes these pullbacks, if they do show up, a lot more palatable, because you've got, of course, the expiration pushed out, and then you can re-add to those positions. This is what all of these triggers are in the past, to those original positions that were enacted much earlier. All right, so that's still the name of the game at this particular point. It's going to be interesting to see what these markets do, but as such, again, it wouldn't surprise me whatsoever just to see these markets continue in the direction of these exponential moving averages, even or considering that of some of these bearish early reversal indicators that we're seeing, or not indicators, but candlestick patterns that we're seeing really sort of show up and become more prevalent over the past 1 to 2 weeks. So again, believe in the trend, accept that there is a trend in effect, and trade in the direction of the prevailing trend. We're above the simple moving averages. We're obviously above the exponential moving averages. The oscillators are relatively speaking overbought, but again, we can remain like that indefinitely in a trend. It is the big sort of distinction. Remember how I was just speaking about the difference in psychology between the range-bound markets and that of a breakout trend market? Well, when you're in a trend, okay, the oscillators are naturally going to remain overbought, and that's exactly what we're seeing at the moment. What you should pay closer attention to is that of the ADX, because the ADX, historically speaking, and it's different for each chart that you look at, it'll give you a point whereby a trend generally pushes to before it does correct. And look, we are getting relatively close to, at least on the S&P, it's just above 50 points on my screen. We're at 4409 at the moment. The CCI, right, the Commodity Channel Index, is still telling us that, look, we're still breaking out and we're trending above this point, which coincides with the late sort of October breakout, which is fantastic. But the ADX, it still has a little bit further to move. So again, the markets themselves, just in short, they are a little bit delicate right now. If you've had open positions, it's been a tremendously profitable period for you. I don't necessarily think that you need to change much up at the moment. However, if you wanted to bank some of that profit, put it in your back pocket, now's a pretty decent time to be thinking about taking a portion of those trades off the table. And then if the markets do correct, right, you can just re-add back down, probably closer to 3,000, that psychological round number. I made the point the other day that for a very long time, we've been sort of operating with that 3,000 area as resistance. And now very quickly, only a couple of weeks later, we're now interacting with 3,100. So you can see just how quickly the markets can move when you get above certain pressure points, but it's going to be very interesting to see whether or not we can re-add if the markets do pull on back down. But hey, I'm hoping that we're going to continue to trend either way. It's really not too concerning at this particular point. It's just giving you additional opportunity if you're already not in the market itself, or if you're looking to actually re-add and top up some of your capital into exposure for the overall market indices. Now, with the the Dow Jones Industrial Average, a very similar picture. We've been sort of talking about stair-step continuation patterns. Also, we've been looking at a bunch of bull flag patterns on individual stocks, but a very similar sort of setup on the Dow Jones. It's poised to break to the upside based on this sort of chart pattern, a very short-term continuation pattern. However, just as easily, we could see this actually pull on back down and come down to, say, 2,700, 100 once again. So just be open-minded about that. And if it does play out this way, please don't lose your mind. Please don't be swept up in all of the bearish sort of sentiment and nature that is going to sort of come to the forefront, obviously, with the market pullback. It is not a market top. It is not a parabolic blow-off top at the moment. We are still quite a ways away from something like that occurring, even though we may be the very early sort of stages of establishing that. This is not it at the moment, formally speaking, in its entirety. We are sort of phase one, so to speak, of what is probably going to continue to be a parabolic sort of rise into 2020. Here's the chart of the NASDAQ. What we didn't see was the retest of this symmetrical triangle. We've just continued to break out once we moved above that of the symmetrical resistance area. And again, we're just continuing to trend. Pay attention, of course, to the exponential moving averages. So when you see the NASDAQ, or if you see the NASDAQ down at, say, 8,400, we will be interacting with the rising 10. We'll see whether or not it has held. In the past, it has. Going all the way back to the midsection of October, when we started to see a couple of retests, not only off the 10, but to a lesser extent, the 20 exponential moving average as well. So all three markets are doing and sort of operating and moving as expected, but I'm just trying to keep this as neutral and impartial as possible when it comes to the analysis. Obviously, we're in a bullish trend, but at the same time, if we do see these markets begin to pull back, don't be fearful. look at it as another opportunity to re-enter at a discounted price. Now, a couple of stocks that are continuing, this is not including the data as at today. The data, or at least the session, is still open. We've got Apple breaking to the upside, which is fantastic. That has been a tremendously profitable trade. Right, that trend trade on Apple, that's doing wonderful things for a lot of people. We've got a bull flag set up on Amazon at the moment, which is still yet to break. Boeing Airlines yesterday went parabolic. It broke above 362.62. This was after this 351.65 entry. Personally, I did not get in on this. I've made that very sort of common and well known to people who listen to Pro and also here publicly. But again, a massive day yesterday, up just under $16 anyway. Baidu's moving into or post earnings as well. So we're looking at a continuation trade. We're looking for that to actually close and back test its open window. Caterpillar is still continuing in its merry ways, or on its merry ways. We've got COP holding that support area and rotating to the upside. Disney is very similar to Baidu, whereby we're looking at this close the window, or to close the window, and then we'll bring down the bullish entry in due course and look for a continuation trade on that individual stock as well. So that's brewing. Underneath the surface, we've got Google just lingering around its breakout point. That's exciting as well now that we've moved through earnings. You can see volume sort of getting sucked out of that stock. It will come back, and it probably will come back if we see a successful backtest. IBM's rolling back over, coming back down to the support area once again, but we're looking for this stock. This has got tremendous upside potential, by the way. As soon as it clears 139.29, there's more detail in that pro analysis class. We've got Microsoft flinching with another breakout, pushing to fresh new all-time highs and continuing on its trend. And we've got Netflix just coiling, ready to burst as well. So a bunch of individual stocks are also supporting the larger sort of backdrop of the markets at this point. So again, the narrative or the message has been on my behalf is just to remain patient and just believe and accept and just hold in the direction of the trend. And that's been tremendously profitable from October more recently through to the current juncture. However, again, just to bring this full circle again, and to rotate this back into the S&P 500, it looks to me as though we've now got two little pseudo resistance points at 3,100, right? Location for candlestick messages. However, it wouldn't surprise me to see these markets just hold their exponentials, surprise a bunch of people, and just push to break to fresh new all-time highs as well moving forward. All right, so that's going to do us as at this Tuesday afternoon market recap. If you have any questions, please email me, success@pivotpoint-trading.com. Otherwise, I'll see you in the next market update. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.